ET Now's Chief Editor Supriya Srinath is currently in conversation with Revenue Secretary Hasmukh Adhia. Let's cut across to that chat.
The markets are keenly awaiting your commentary on some of the clarifications that we'd like from you on the GST. Congratulations, on getting some kind of a consensus, the laws being passed by Parliament. I will first perhaps begin with the question of readiness. And everybody keeps talking about the July 1st date, or should it be September 1st and all of that. What is the level of readiness on the part of the government, the infrastructure, the kind of education of awareness, and the part of readiness on Indian industry?
Well, as far as the readiness comprises of three things when we talk about readiness on the part of the government. The first is the law and the rules. And as we had promised to all the businesses, we said that at least 3 months before the rollout, we will give you complete clarity on the laws and the rules. So the laws are now very, very clear. They've been passed by the Lok Sabha. Everybody has them with them. The rules, 5 rules we had already notified. 4 more rules would be coming in public domain on 1st of April, as soon as the council approves it on 31st of March. So now that part is over. The second part is the IT infrastructure. Now that part also we are completely on track. I've been monitoring the progress of IT infrastructure. Even the migration of VAT and service tax and excise dealers in terms of registering with GST portal, about 60% of the dealers have already registered. So that migration process is also well on track. The third aspect of readiness is the reach out to the industry. Now that's a very big challenging area for us. And unless we have massive campaigns all over the country explaining people, explaining the traders how to go about GST business now. So that's something which we will have to do in the next 3 months. We have a game plan for it. We have got a strategy for it. We have got people working on it. And we do hope that we will be able to cope up with it.
The reason why I asked that question, sir, is because a lot of people in Indian industry, at least, and tax experts have voiced that concern that maybe July 1 is too close for comfort. Maybe September 1 is a more ideal deadline. It will give Indian industry more time to adapt. Is that a logical argument that cuts ice with you?
Probably people have not taken the government too seriously, because we had been telling right from beginning that we are very serious about it. We would like everything to happen on time. And they have been caught unaware, actually, it appears to me, If they had taken the government seriously, they would have started preparing for it right from August last year. But anyway, I think 3 months is good enough, and I'm sure the businesses should be ready for it now. Now they should cope up with this.
Will you be open to a September 1 rollout?
Well, it depends what is the decision that the GST Council will take about it. And closer to the rollout date, if at all it appears to the council that it's going to be very challenging because the businesses are not ready, then that's a call that GST Council will have to take.
You've spent considerable amount of time with the GST Council in the last 12 meetings. There's going to be another 13th meeting which will perhaps decide on some very crucial issues there. But between now and the rollout date, let's presume it's the 1st of July and let's be hopeful it is. Looks very possible it's going to be September 1st. What are the priorities of the council going to be? Rate fitment is going to be a challenging area because people believe 4 slabs, can all commodities fit into that?
Well, yes, rate fixation is an exercise, but it's not such a big exercise. We have already announced what will be the formula for fitment. It will be mechanical exercise in most cases. Whatever is your present incidence of VAT plus excise or VAT plus service tax, that will be the tax rate, and closer to that whatever slab you are fitting into. There might be only a few items where there could be some discussion, because those items, even if they are attracting a higher rate of duty now, the council may like it to be in a lower slab, some of those items.
So you're essentially saying that the idea is to fit commodities in rates where they perhaps presently exist, somewhere in that vicinity. But the tax structure does throw up a lot of several goods that don't fit into those slabs. What will the philosophy of fitment be for
so
those?
that is where the discretion of the council will lie, The council will have to take a call on it. And before the council decides it, a group of officers will work on it. They will give all the pros and cons of taking a particular decision to the council. And after that, the council will decide.
I want to ask you a specific question on services, which will now have to be either in the 12 or the 18% category. The finance minister has said that it's a mathematical exercise, but if you actually look at the numbers, Due to the fear of the revenue loss, will we see services move really to the 18% bracket? Is that perhaps the only choice and option, pragmatically speaking?
Well, as far as the majority of the services are concerned, yes, they will have to move to 18%. But that doesn't mean that all services will fit into 18%. There would be some exceptions in respect of those services where at present also we are giving some kind of an abatement, and for good reasons, because they are not able to claim input tax credit for petrol, for example, in case of transport sector.
That's right.
So those kind of abatements will have to be accounted for, and those services will have to be put in a lower slab.
I'll come to lower slabs in just a bit, sir, because a number of peculiarities exist in the tax structure of certain items, say BDs for one, say sugary drinks, the junk food category. Internationally, the experience has been very different, but there are of course very powerful lobbies at work here in India to bring them to some kind of a level playing tax field. What is the government's view on this at this stage?
I don't know what is the level playing that you are talking about.
I mean rationalized tax structures. Why should BDs be taxed at just 4 to 6 and cigarettes at perhaps 6 to 65?
So what you are talking about, that all kind of a unhealthy product should be in the same tax bracket. Well, ideally it's right to do so, because whether it's BD or cigarette, everything causes harm. But sometimes, in the larger interest of the country, we also take a different decision. For example, at present, the rate of taxation on BD is much lower compared to cigarettes. Now the council will decide about it. This is going to be one of the contentious issues.
So a lot of people are very worried whether Pepsi and Coke and drinks like that or sugary drinks should be in the demerit category. I know hectic lobbying has happened. What's your personal opinion on this?
No, I may not have any personal opinion on this. It is for the council to decide. But the broad consensus in the council is that it has to be a aerated sweetened drink, which would be in that category where the cess would be applicable. Aerated as well as sweetened, that kind of.
How do you decide on issues, say like coconut oil? It's cooking oil in Kerala, but it's hair oil in Rajasthan.
No.
So the usage and the priority then becomes very varied.
Yeah, so those are the issues, couple of issues where yesterday also in the parliament there was somebody raising this issue.
Yes.
Where council will have to take a call on it, after discussion, and so far nothing has been unsurmountable. The council has taken logical decisions after hearing all opinions, and that's the best part of GST Council's process.
We'll perhaps see the GST Council make those tough calls, but I do want to talk to you about exemptions. The exemptions in indirect taxes are of course a huge part of this entire structure. Are you going to use this opportunity to phase those out, or will you perhaps be using something like a sunset clause that you did in direct taxes to phase those out? Because many people believe this is a great opportunity for the government to phase out exemptions and move towards a path of less tax.
I understand what you are talking about is the industry exemptions given for industrial promotion.
That's right.
Whether it is given for a backward area or for a particular product in several states. Now, yes, in fact, because GST is a new tax, it is not necessary for any state to grandfather those exemptions. That's what we have told them. But still, if they do wish to grandfather some of those exemptions, they have to do it in form of reimbursement. Certainly the exemptions will not be given, because you can't exempt anybody from taxation, because if you exempt some product or some company, then the chain of input tax credit is affected. So everybody will pay the tax first, and then if the state or the central government wants to reimburse, they can reimburse that portion of the tax for which they have given a promise of exemption.
So there are certain issues that have irked or have caused some concerns in the industry, and I'm just going to voice specific ones like that. The laws as they have been passed do not provide credit facility for telecom tower equipment. Now this is a change in stance from what was originally circulated. What is the position right now on this, and why has that position changed?
Well, at present we do not give that exemption. We do not give input tax credit for telecom towers, and the council, after a lot of discussion, decided to maintain the status quo in that matter. So that is what is the present decision of the council. There was a lot of discussion about it, whether or not to give it.
But what has weighed in the favor of maintaining status quo and not exemptions?
The main reason is that these are not capital equipments within the precincts of a factory.
Okay.
Because we have decided that as a category, any capital goods in the factory premises will be exempted in the first, will be given input tax credit in the first year itself.
Okay.
Unlike what we have in the excise today, the 3 years period for availing of input tax credit from capital goods. But now in the new law, it's going to be beneficial for everybody because all the capital goods will be given the benefit of input tax credit in first year.
Let me just move to the registration process right now. I think the one criticism that's coming in, if I may, or the concern, if I may, is that service providers will have to get registered in various geographies, and that will perhaps mean about 2,000 annual returns. On hindsight, do you believe that you could have implemented a centralized registration instead of state-wise or union territory-wise? It just kind of goes against the thesis of ease of doing business.
Well, ideally, any GST should be administered only by one authority, either the state government or the central government. There is no country in the world in which the administration of GST is done by two authorities. So we have a particular challenge in India. How to cope up with this challenge is an issue.
It's a very unique GST.
It's a very unique GST. If the states are willing to trust Government of India for collection of taxes, then we would have only one authority. But that is not the case. And because the states themselves want to administer the tax, they also want to know how much of services has been given in their state by all the people who are operating on all India basis. And that is why all the officers also at the state level, they were not in agreement with the idea of centralized registration. The very fundamental principle of IGST, that there would be accounting for services given in every state. Any services which are given from one state to another, there will be IGST on that. So those principles will be compromised if we go in for a centralized registration. So all the officers, the state level commissioners of commercial tax, they were not in favor of single registration.
But will you admit it makes life difficult for service providers?
Not so much. What we have done is that the valuation rules for intra-company supplies have been very liberalized now. In fact, people don't have them with them, but they will be coming in public domain on 1st of April. So we want to leave it for the companies to decide whatever valuation figures they want to put, and then we won't challenge it, you know. So those intra-company supplies where the valuation was a big challenge, that has been taken care of. And otherwise also, wherever place of supply rules are very, very clear, there is no problem. Because we have given elaborate place of supply rules